Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. Today, I'm joined by Chris Vermeulen, who is the founder and chief investment officer at Technical Traders Ltd. Although still young, Chris has a lot of experience when it comes to trading, business, real estate, marketing, publishing few books, and much more. Chris, I have been following your work for years. Great to have you finally in my show. Welcome.
Thanks for having me. Pleasure to be here. I'm excited to talk.
Thanks. When I said young, I did it for a reason, since we are the same age, and I consider myself still young. So that's the reason why I said it.
So do I. I'm a kid at heart.
Definitely. Chris, your investment strategy is based on a belief of owning only assets that are rising in value, setting you apart from the buy and hold crowd who watch their assets going down during market downturns. I want to touch in this interview on both those terms, market downturns and assets rising in value. Let's start with the current stock market. Is the current stock market in a slow bleed or a dead cat bounce, like you posted yesterday, I believe?
Yeah. So there's definitely a good question. I mean, we're not really going to know the full-on answer to that until the market picks a direction. Now, obviously, we've had a huge market sell-off over the past month or so. The Magnificent Seven sold off. We saw levels of fear among investors with the volatility index, the VIX, spiking to levels we haven't seen since COVID and since the 2008 financial crisis. So there was definitely a big cleansing event. And usually when something goes straight down, he wants to rebound and come straight back up. And the big question here is this a dead cat bounce, meaning it's just bounced back up, people buying the dip, and then it's going to roll over and go lower? Or is this like a V-shaped bottom, and we're going to see the market continue to grind higher? Now, the markets right now, when you look at the US stock market, has definitely got a lot of mixed signals. Our long-term investor kind of signals based on the weekly chart is actually telling us that a lot of technicals are breaking down behind the scenes. In fact, all of the kind of sentiment and money flows have broken down behind the scenes, like under the hood of the market. Most people don't see these. These are all kinds of different money flows that I track and follow. But the short-term trend of the stock market is still up. We're still in an uptrend. It's just getting very weak. It's very similar to January of 2022, which is just before the stock market sold off about 25%, went into a small bear market. So we have mixed signals. Short-term or long-term view, I'm bearish, and I'm expecting the market to stall out over the next couple of months and start to go down. So we have to see what this is.
Yeah, that's my next question. How do you see the stock market in the next 6 to 12 months from now? Is the painful reset coming? What series of bad events awaits us in that period, actually?
Yeah, there's a ton of things coming together that signal this major bull market in equities is coming to an end. The economy is coming to an end. For example, there's different cycles at play. The stock market cycle, it usually tops out before the economy because investors are savvy. They see earnings starting to slow, earnings getting cut. So investors move away from stocks, and the stock market tops out before the economy. So typically, when we see all these things come to happen, we tend to see gold do very well, energy stocks do well, and we see like industrial stocks do well. And all three of those, energy stocks are up near all-time highs. If you look at them going back like a couple decades, energy stocks like XLE ETF shows that we are up in the nosebleed section. Gold hitting new all-time highs. Industrials are hitting new highs. And industrials are funny because no one ever really looks at industrial capital goods, which is like new equipment, assembly lines for factories and all that stuff. And typically, just like market sentiment, everybody's most bullish right near a market top, majority of people. Business owners and warehouse factory workers are also the most bullish on their company after a big winning streak. They all start upgrading their equipment. And so they all buy industrial capital goods. And so those companies do well, which is why they're at all-time highs right now. And that's usually right at the end of an economic cycle. So there's those things coming into play telling us, okay, this market is, I think, just months away from topping, if it hasn't topped already. And on top of that, we've got unemployment starting to inch its way up. It's above the 200-day moving average. The unemployment rise. Every time we've seen this, we've gone into a stock market correction. We've gone into a recession. So there's a whole lot of things coming together, painting the big picture. I think this year the market will top. And then I think 12 months from now, I think we'll be lower, and it could take a couple of years to recover. It really depends on how things unfold, how the banking system holds
Yeah.
up. I mean, the Fed and everybody says, "Oh, the banking system's great," yet still ones are blowing up out of nowhere. So, I mean, it's they're trying to comfort us with words, but the reality is, the financial system is literally like on toothpicks, all fractured, and it's a house of cards. It's not very
Yeah,
safe.
yeah, yeah, definitely. Let's say the market really tops, like you said. How are you personally playing the upcoming scenario? What asset classes, commodities work for you?
Yeah. So one thing that actually is also showing that we're coming to the end of all of the stock market cycle and the economic cycle are interest rates and the price of bonds. Interest rates had a huge jump up. Finally, we're starting to see bonds like the TLT, long-term treasury bond ETF in the States. It's finally like turned a corner. It's been going down since COVID, dropped like over 45%, which has done a lot of damage to investors. Um, it has now turned a corner and is now more or less built to bottom. It's either bottoming or it's starting a new major uptrend already. And so that's a sign that interest rates are most likely on their way down. And when interest rates start to go down, that means the economy is weakening, and the Fed is trying to support things. So when we look at it from the interest rate and bond scenario, it is painting a huge shift in falling rates, rising bond prices. What asset do we move to? We could be moving into bonds as a very strong play. There's a lot of upside, 15, 25% upside potential in the bond market, while the stock market potentially starts to fall and slide over the next several months. Now, if the stock market starts to fall enough and it goes into a huge, what I call is a stage 4 decline, which is like the 2008 financial crisis, it's like the tech bubble, it's a big financial reset, which I believe the markets and the economy and the whole world is set up for another one of these big cleansing events, which is normal, although it catches most people off guard. Then we flip to inverse ETFs. So we will actually buy like an inverse index, like SP 500 or NASDAQ ETF. So as the stock market falls, these ETFs go up in value. So there's two ways we can play it. The first half will probably be a bond play. And then as it gets more volatile and the markets just keep falling and falling, then we move to an inverse ETF because they'll just keep going up and up and up.
Yeah, yeah. Chris, what will be the biggest trigger for crash? The elephant in the room. Is it the banking sector, real estate bubble bursting, defaults? What do you think?
I don't know. I mean, I don't follow any of that stuff. I'm pure technical. I don't really watch the Fed. I don't care about the news. My kids tell me if there's any breaking news. That's how I get my news. So I don't know what it will be. I mean, we never know until after it's more or less happened. I do feel like, a lot of people, the herd mentality, have gone through many Bitcoin. They're rich, they're broke. They're rich, they're broke. Right? And people are doing the same with the stock market. Everybody's had a big run. They've piled into the Magnificent Seven and Nvidia. So I think people are much more sensitive now that when things start to roll over, they're going to want to sell and they're not going to want to hold it. So I feel as though just people being more in tune with what the markets are doing, more in tune with how quickly things can fall. I think it could, once it starts to sell off, I think just fear of losing more money could actually create a tidal wave of people moving out. And I think a lot more people, like I thought a lot of investors and hedge funds and advisors now realize, they need to be on the ball because a lot of them never sold. An advisor almost never sold anybody's bonds. Everybody held their 40% of their portfolio in bonds. They lost 40% in value, made no interest rate returns for years because they were like at 0 or 1%. And finally, people realized that advisors really, if they really cared about your money, they realized falling rates or rising rates are not good for bonds. They would move you out. So I think advisors have a lot to prove now. And so they're going to want to also move their clients out of equities if they start to fall, I think, this time around, which will create more selling pressure because that's where a lot of money is, most of the money is with advisors. And so if they just let their clients go through the buy and hold roller coaster, they're gonna be hated once again. Like, why did I lose half my portfolio, my life savings? You're my advisor. You're supposed to avoid this stuff, right? So I think it could be a tidal wave of sensitive people and people realizing, hey, you need to move to a strategy like what I do, which I call asset revesting, which is we reinvest our capital into whatever asset is going to go up in that particular time horizon.
Yeah, I believe that in your memory, 2008 is still fresh. Do you see any similarities with real estate and stock market crash in 2008 compared to a potential upcoming?
Yeah, I do. I mean, I feel like there's a combination, a hybrid. I feel like we have a mix between a 2000, tech bubble pop, just in terms of what the US dollar index is doing, the price of gold starting a new major super cycle. Um, I feel like we're going to have a big unwinding event, kind of a bit from a technology standpoint. But I also feel like we have a big connection with the 2008 in terms of a massive real estate bubble. I believe we're in a huge bubble. I think things just got way out of hand. Everything has gone up. It's going to take a while, I think, for prices and things to come back down. I think I think inflation will eventually work itself out, but it's probably going to take a couple of years, and we're going to need a recession, depression, whatever people want to call it, for prices to kind of work themselves out, people to take the losses. But I see a hybrid kind of between them both. Commodities are like the most undervalued asset. Stocks and real estate are the most overvalued. That's the same setup we had in 2000, just before the big cleanse. So, a lot of things are saying, hey, this is like a perfect storm. I think we've got another big stage 4 reset, which is the ultimate opportunity for investor. If you avoid it, you could literally just liquidate and avoid it, let everything fall apart and take your money and then reinvest it after the cleansing event. So you have tons of upside, great dividends. You can buy stuff at affordable pricing, or you can do kind of what we do, which is let's move into something that's going to rocket in value as everything's falling apart. And then once we see that coming to an end, we step out of that and we move back into the market with even more capital and then ride it up again. So I mean, this is what I did back in 2008, and it was amazing. I mean, it's an unbelievable opportunity to, the markets fall about 4 to 7 times faster than they rise. So you could be in like a 7-year bull market, and all of it could be wiped out by this time next year, and you'll be like, "Oh, it took forever to get there, and I lost it all in like a blink." So there's that much opportunity on the downside. You could make like 4 to 7 years return in 1 year if you conservatively like protect your capital and take advantage of it in the proper way. So many people will swing for the fences, leveraged ETFs and options. It's a great way to hurt yourself. Falling markets are dangerous. They move very fast. You have to have a different strategy, a different mindset, shorter trading time frames. But we don't have them very often. So a lot of people don't know this stuff until they start dabbling in it. And they're like, oh, I took another hit. Oh, why am I keep losing in the falling markets? I'm trying to profit from it, right? But the markets do not make it that easy. So that's what I specialize in, is I love to make money in rising and falling markets. I've been through many cycles. I have strategy in place that allows us to identify when to get in, where to take profits, how we need to, which strategy to use. So, and I just use ETFs. So it's super simple, very low volatility. That's how I kind of go about that.
Yeah, but would you agree that 30 or 40% pullback in equity market and in the real estate market would actually not be a pullback, but rather returning to realistic valuation after the COVID bubble?
I think so. I mean, I would love to see that. I saw somebody showed a mortgage chart, rates of rentals, I think it was. Anyways, it shows this huge cycle going all the way back to the 60s, and where we are in terms of the housing bubble and the monthly cost to buy and hold a house right now. It is like huge. It's way at the top end. We haven't seen this top since like the 80s. We had it again just in 2000 and like 2007, somewhere in there. Now we're back to one of these big housing crisis cycles. They're like a 20-year cycle. I would love to see a huge reset. I think things are way overdone. I mean, the baseline salary that people take like right now for minimum wage, like in my town, you can't even live in this town if you're like, just working hourly. Like it's just too expensive. Like every house is like $1 million and change, and it's like lipstick on a pig. It's an old wartime house with crooked floors. You put a marble on it, I mean, it'll go everywhere. And it's got 40 layers of paint, and that's like $1 million. It's crazy. So nothing is affordable really for like younger generations starting out. So I would love to see a big reset. In my area, they're already down about 18-20% right now, the home prices from the highs. But I still think there's a lot to come down. I think we're going to see that pull back, which is a great opportunity because I think real estate is a great way to make passive income. I like multifamily properties, which I own a bunch. I love self-storage. I own a self-storage facility. I love the passive income. And if prices can finally come back down to where the numbers actually make sense, but right now they just don't make sense. Like it's crazy.
Yeah, same here in Croatia. Our prices went like 2x, 3x in 5 or 6 years. That is totally unrealistic at the moment, especially when you look at our average salary, which is like
Yeah.
1,200 euros, something like that. So
Yeah.
unbelievable. You mentioned the real estate cycle. How do you recognize the tops and the bottoms in the real estate cycle?
I think of a lot of it has to do with just kind of feel like, I mean, I've got a pulse on kind of the financial markets as a whole. Just because I follow them all the time. I follow the stock market, the bond market, I follow real estate. But you can follow like a good gauge is like um, what are they? There's a bunch of different things you can follow in the States that show how many new building permits there are for single family dwelling, multifamily dwelling properties. And where we have been is we're seeing those have completely dropped off. But a few months ago, we saw a huge spike in multifamily building starts. And we've seen this every time just before real estate goes into a big plateau for like a decade or so, it pulls back and flatlines. We see everybody move into multifamily buildings because that is where you get economies of scale. You have one piece of property that you can build 80 units or 40 units on it and get a good bang for your buck. Those same units all share the same roof. A lot of them share the same walls. They share a lot of the same things. So right now, the way real estate is so expensive, the only way for a real estate investor to try and squeeze more out of it is to say, okay, we need to build multifamily. And it's because it's more efficient, cost effective to build. And two, they are cheaper to build. So our rents are less. So we can fill the units because actually people will be able to live and rent a place versus owning a house for 4 times the amount of money. So we've seen that spike and now it's starting to bomb and sell off. And we have that with single family dwellings. They already fell off a cliff. And so, just looking at the momentum of building starts, and I know some people who build subdivisions, they do all that stuff. They've had all kinds of investors in the last 12 months back out of the deal. They've just given up on millions of dollars they've invested. They said, no way we're touching this because we're going to lose like 40 million versus 2 million if we keep doing this. And they said it's completely dried up. So that's just kind of a feeling. My dad has been in real estate his entire life. He had about 1,500 units at one point. So I kind of born and raised feeling and understanding it. So it's just kind of an innate feeling and gut that I follow. And yeah, it's just kind of how it is.
Definitely a great background with your dad and real estate. I want to touch a little bit also on metals. You mentioned that at the beginning of our interview that you believe that metals will perform good. But do you believe that is the case if we see a market meltdown? How do you see metals performing in an environment when we see market crashing? Do you believe that they will decouple at one point or?
I don't think they're going to fare very well. So a short-term trader, somebody who loves precious metals, I think we could see gold go to 2650, 2750. That is where the monthly chart, the weekly chart, the daily charts, from a technical analyst standpoint, where we use chart patterns and momentum, that's where gold should run out of steam. And so there is some more upside potential over the next month or two for gold and silver and miners. But if we do get into a big stage 4 of financial meltdown, a reset, pretty much everything goes down. There is no real safe haven, which is why bonds might be a defensive play. They might go up. And then, of course, you need an inverse ETF because you can't try and pick stocks. They're all going to go down on average. So you have to play something that goes up while stocks fall. So I do think gold will have like a 15 or 20 or 30% correction when we go into this. So gold has a little bit of upside, but overall, I believe we can buy gold and silver at the same price now, or actually quite a bit cheaper, probably next year. And I believe that'll be like the last opportunity to get in for precious metals before they go on the next major super cycle run. So after this correction, I think it'll be just like buying gold in like early 2009 or late 2008, just before it went like a 5-year run to the upside. So that's what we're setting up for. And that's when I'll be looking to buy a lot more physicals, when I want to get into gold miners, because they can run like huge percentages. And we haven't had a cycle like this since really 2004, which is when the last super cycle started. So this is a really exciting time, but we just have to wait. I know people are getting antsy. I know people are loading up on gold miners saying, this is it, this is it. I'm like, well, I think gold miners are going to get hit very hard during this pullback. You'll be able to buy them way cheaper, 3-6 months from now, probably, for that big move.
Yeah, but we had this disconnect. We are having this disconnect all the time with gold miners, exploration companies. I mean, gold is at all-time high, but exploration companies especially some of them are at 52-week low. That is a big disconnect. Do you believe that this could change in the short term?
They might come to life over the next month or two. I mean, I think some of them have, but I mean, COVID's like the perfect storm to hurt miners and exploration companies, simply because, well, first of all, couldn't work for a long time. People weren't allowed to go in Canada. You weren't allowed to go places, but then fuel is through the roof. Equipment, anything you got to buy now is like double the price. Labor is through the roof. So the cost for miners to get metal out of the ground just skyrocketed. So gold has to be like way higher for them to make even the same profits that, just because gold's high doesn't mean they're going to make more, really at this point, because just their operating costs are so high. And I don't think we're in that perfect scenario yet. I think for miners just to come to life, I believe they're undervalued. I think there's going to be great potential, but it's just not the right time. And they will, I think, do exceptionally well, because we're going to go through a financial reset, which means labor prices are going to drop, equipment and fuel pricing, all that is going to drop. And then this is also a time where precious metals and miners come to life and start to rally. And that's probably because now they're going to make bigger profits and people are worried about the economy, so they buy more gold. I mean, it's just this huge circle, this cycle of emotions, right? There's all these different waves, and eventually it'll come full circle, and they'll be in the spotlight. The dog now is like the best thing, is the next hottest thing. So gold miners have been in a favor for a long time, totally underperforming gold.
Yeah.
But they're going to go from the worst asset to probably one of the best assets, potentially next year.
Agreed. One other commodity that will perform, I believe, in my opinion, that will perform also very good, especially in the case if we see a market meltdown. I see a fast recovery with that commodity, and that is uranium. What's your take on uranium?
Yeah, I think I mean, I don't know the uranium space very well, but I'm kind of getting more into climate and clean tech side of things with some other projects, and it's really opened my mind that uranium and nuclear power, I believe, is actually one of the best ways to get energy. And of course, the world now is deficient on energy. It's actually a very clean energy. It's very controllable, very safe now with the facilities they have, and I mean, there's a huge, I think, lack of education in this field. So I think it's going to take off. We got electric cars. Everything we run is electric. I mean, it's just hard to keep that going, right?
Yeah.
So uranium is the best way to get energy, I think. And of course, it's hard to get that stuff. I know there's like lacking in certain chemicals in order to process it now. So, I mean, I think it's a great way to get energy.
Yeah.
But there's all kinds of problems jacking up the price of uranium. So whoever's mining uranium and all that stuff, I think there's going to be huge potential. I think it could dwarf that of precious metals, because there'll be precious metals are people worried about the financial side, currencies, things collapsing. Uranium is like, well, we need to keep the world running. As soon as the internet goes down or the power goes out, we're all crippled. Like, we're totally crippled. You better have silver rounds and gold rounds and on you to pay for stuff, or have a gun and bullets to demand it, right?
Yeah.
So
Unfortunately,
power is the next currency. And I think uranium controls a lot of that, or can.
Agreed. What is your take on the US dollar, both short term and long term?
For the last year or so, I mean, really, I think it's trying to figure out which way it wants to go. I think when we go into a financial reset, I think the US dollar will actually do fairly well. I think it'll move up. But right now, I mean, we haven't really touched or looked at it in a while just because it's been trading sideways in a big range. It's really going nowhere. It's what I call a stage one. It's going sideways. There's no point in getting into something just chopping around. So we steer clear of that. But I am bullish on it. I'm bullish on it into next year. I think the dollar index will go up. Obviously, there's a lot going on with the yen and it falling. So it'll be interesting to see what goes on with the whole, overseas with different currencies, because it is a basket, or the US dollar index is what I'm talking about. So it'll be interesting, but I am bullish on it.
Okay, final question. For an average man on the street, how can exactly he guard himself against the coming financial reset? What should he do next?
Yeah, I think I kind of feel like there's two ways to go about it. One of them would be, if you're if you're happy financially, you're with what you have now, I would be looking at a way to just start liquidating and hold cash. Cash is king. If everything's going down, cash is king. There's nothing better than watching everybody lose their shirts and everything collapse, and you're like, I still have the exact same amount of money. Actually, I had with plus interest than I did, and everybody else is down 20, 40%. So sidestepping it, moving aside, saying, okay, I don't need to make a return. It would be nice. I know there's inflation, but preserving my capital and just standing on the sidelines, I am happy with that for a year or two. Let me just preserve my wealth and see what happens to this world. That's the one way. It's a very simple way, although people don't like it because they want to be in action a lot of times, and they feel like inflation is going to kill them. I'm like, well, it's better to like get eaten away by a little bit of inflation than it is to lose 40 or 50%. Like,
Yeah.
There's a huge difference. I'll take a little loss and be happy than just from inflation, then take a massive loss and be like, why did I just give up 30 years of my savings, like gone, right? The other way is like really, a plug of what I do is like, you can follow what I do. Everything I trade, I give away in my service, trading ETFs, is what I trade with my portfolio. So you literally just copy what I do. You ride my coattails. I say, buy this ETF, this much of your portfolio. Here's our stop. Here's our target. And then I just update through there. And we all trade together. As the markets go up and down, we all just rotate one ETF at a time and take advantage of these markets. And, our account keeps hitting new all-time highs pretty much every month. It doesn't matter if the market's going up or down because we rotate from one asset to another. And it's super easy. There's 5 to 12 trades a year. And that's the whole point, is keep it simple, identify trends, manage your positions. And if you protect yourself from losses, the gains take care of themselves. Like if you're not taking any big losses, you also don't need to make huge oversized gains because you don't have to overcompensate for these big losses. So we have a lot of first, second base hits. They're not huge wins, but we don't have any big losses. So we just keep inching our way up. And I call my strategy the CGS strategy, which stands for consistent growth strategy. And if you look at our portfolio, it's just consistently up. We are outperforming the NASDAQ, even from the 2008 market top. I mean, we're outperforming the SP 500, and we do it with very low volatility. Our biggest drawdown is less than 6%, whereas the stock market moves like 6% in 2 days. So it's huge, the difference of what we do. And so it's focused on people who have wealth, who value protection, who value consistency. And if you have consistent growth, it compounds beautifully. That's where we get a lot of growth. Just let it keep compounding. We don't have any big losing years. So it works out very, very well.
Yeah, with that said, how can people reach out to you and follow your work?
Sure. Yeah, they can go to my website, which is thetechnicaltraders.com is the key one. If you go to YouTube, type in The Technical Traders, you'll pop up. You'll see my channel on YouTube. I share my charts and videos of what the markets are doing. Yeah, you just ride my coattails. I have a free newsletter, so you can get a feel of what I'm doing, get an idea of how I go about things, and see if it fits your style.
Sure, we will post a link. That was Chris Vermeulen. Chris, thank you for coming to my show. It was a great chat, and I wish you luck.
Yeah, thank you very much. Great questions. Take care.